Hello everyone, welcome back to your Smart Money Source. In this video we're going to break down some amazing trades that we took in the Academy. Some of them were formulated by myself and others by members. These members are going to be explaining in this very same video how they managed to read the market and take those trades. Before I begin, I want to quickly remind you that we have recently launched a new website and we are currently doing a sale for our membership. So if you want to join, the monthly membership is now $100 and the yearly membership is $500. You can use the link in the description. So let's start with my analysis on Euro USD. On Tuesday, I was expecting price to make this following move. First, coming into this level where Smart Money previously stop hunted and then broke the structure to the downside. Then coming back into this discount level where we had an unmitigated order block, and from here continue the up move to hit a higher time frame level. So as we can see here on the Euro USD chart, price did just that. First it went higher to mitigate this level, coming into this level right here, this area where Smart Money previously accumulated orders, and from here it took off into a higher time frame level. So let's start with the daily chart so you can understand my thought process and how I read the institutional order flow using higher time frame bias. From last week, we have been talking about, at least on the Discord, we have been talking about Euro USD coming from a key level on a weekly chart. If we go to a weekly, we can see a price cleared up these equal lows that were on the weekly chart, and from this point, price was decided to go higher. Why was price trying to go higher from this level? Not only we are coming from a reaccumulation, so this basically would be the backup of this reaccumulation, but also there were order blocks and levels here that needed to be mitigated. So after price came from grabbing liquidity on a higher time frame, which in this case is the weekly level, we can expect the lower time frames to be broken as they are seen as internal range liquidity. So let's look at the daily chart. We can see price after hitting this order block, which was part of the test of the break of this structure, price started pushing higher. So when I took a look on Tuesday, which was right here, the 23rd, price was already coming higher and coming from mitigating now this order block, which was the one in charge of grabbing the liquidity below these lows. What did I see here? I saw these equal lows, these equal highs that were pending to be taken. Price was generating this or engineering liquidity above this high, so we know there are going to be buy stops. And what other thing do we have? If we were trapped inside of this range from this low to this high here, then we know that this is premium level above 50%, so basically inside of this area. And what can we notice here? We can notice that we have this order block that needed to be mitigated, and at the same time we have this liquidity or imbalance that needed to be rebalanced. So this level and this level were attracting price like a magnet. So if price is coming from grabbing liquidity on the sell side, we identify the liquidity that was left on the buy side, in this case this high here and this high here, and we had a reason for price to get to this level and then try to push lower from here. As this is a break of market structure, and this is the order block or the stop hand that originated the breaks of market structure. Here we have another one. So let's see how I framed a long from down here and how I managed to get a 1-30 RR trade. So if we go to the 50-minute chart, I was expecting price to bounce off this level because this was a reaccumulation. We had higher target levels that need to be met or mitigated, and price was returning to this level down here where I expected to long from. So as I always say, there are two types of entry, one being the buy limit, which is a little bit riskier because you don't have any type of confirmation on lower time frames. And the other type of trade would be waiting for price to get to our point of interest, in this case this order block, and look into lower time frames for any kind of confirmation. A confirmation can be a break of market structure most of the times. Well, basically a break of market structure is the only kind of confirmation that we have. We also have distributions, accumulation, and all sort of patterns that can help us identify where to take trades from. When price was approaching my level on the 15-minute chart here, as you can see, we have a massive drop, a sell-off getting into this level. I started looking on the 1 minute chart to see if I can find any type of confirmation to take a long. So when price was approaching my level, we can see that it started making deeper retracement into each one of these swings. So I was patiently waiting for price to give a clear indication that there was going to be a reversal. So looking at this Wyckoff accumulation, I label this as selling climax, automatic rally. Secondary test on phase B, taking out the liquidity below the selling climax. As we can see, we have a tiny little movement here, which can be the preliminary support. The automatic rally came and tested and grabbed the liquidity above this level and then continuing lower. So I wouldn't expect to be a sign of strength just now because of the fact that the automatic rally already made a deep retracement into their preliminary support. So after the secondary test on phase B, we had the failed uptrust action, basically a failed sign of strength. And we can see that on the volume as well. You can see price is trying to push higher, but volume is decreasing. So if we apply the law of effort and result, this rally has no effort on it. So there is no interest by smart money to push price higher from here. So then later we have another sell-off, which was potentially our spring. But at this moment, I didn't know that yet because we needed some kind of confirmation. And here is where it gets interesting. After this spring, we can see we have a push up, which doesn't necessarily have a lot of volume here, as you can see. But that's okay. I was still waiting. There is no confirmation. And here, if we go on to lower time frame, I will use this tool so we can see lower time frame very easily. There was a reaccumulation that was happening when price was trying to test this spring. We can clearly see here on this spring that we have another lower time frame accumulation, selling climax, automatic rise, secondary test on phase B, failed uptrust action. This is the creek, the spring, and then we have the sign of strength or break of market structure. What is this leaving behind? When price moved forward, we have all this imbalance that needs to be rebalanced, and we also had this order block that needed to be mitigated as well. So if there was any kind of confirmation on this price action to take a trade, ideally I will take the trade on this order block, which it is the most discounted level of the range we are sitting now, from this low to this high. So if we look at this structure, we have a clear reaccumulation. We can label it if you want. We have a distribution here inside of this area, right there. We have a distribution inside of this area right here. And when price started selling off, we have an accumulation inside of this price action. We can call it as selling climax, automatic rally, secondary test on phase B, sign of strength or failed uptrust action, didn't go past through the automatic rally. Then we have the spring here. And after the spring, we have the break or market structure. Obviously, when we are looking at a Wyckoff reaccumulation or any Wyckoff schematic, we can only say that price is breaking the structure, not because we have this minor break or market structure, but because it broke actually the trading range of the entire Wyckoff reaccumulation. In this case, if we consider this to be reaccumulation, this was a selling climax, automatic rally, secondary test, failed uptrust action. This was the creek, which itself was an accumulation on lower time frames with a spring, and then the break or market structure happens right here when price breaks and closes above this particular high, which was the highest high of this entire range. So after price broke this high, I identify yet another reaccumulation. We can see that a reaccumulation obviously starts as by a distribution. We had a buying climax, automatic rally. This will be the primary supply, uptrust, and from this uptrust, as I was having a bullish overall bias, we can see that price made a selling climax, automatic rally. Then it made this test of the selling climax. Price failed. It's failing to go below this level. And if we look at volume, we will see that price, when it was getting into this level, volume is increasing, but we don't see the result. If volume is increasing on a downtrend, which was this lower time frame downtrend, price should be able to continue pushing lower, but instead it was staying on this level. And why is that? Because this liquidity or this supply is being absorbed by smart money to enter longs. And fair enough, price made a move to the upside, leaving clean equal highs here. And when price was starting to break after failing one more time to break the low here, again, now price has less volume, price is going lower, volume is decreasing, which is a sign of lack of supply basically, and price failing. After this beautiful engulfing move to the upside, this is where our market executed and placed a safe stop loss below this level right here. We can see that I placed my stop loss based on this last point of supply, basically in case price wanted to go a little bit lower and then continuing higher. It was a risky entry, but it was enough for me because this is not only confirming it long on this structure, but also this itself was the backup of a reaccumulation, and this reaccumulation itself was a retracement of the first sign of weakness, which was creating the last point of support of a bigger time frame accumulation. So you can see how price is fractal and is going to repeat the patterns over and over again if smart money is trying to go higher in this case. So identifying the institutional order flow is the most important thing. Basically knowing that price is likely to go higher from this particular area, and from here trying to find an entry is quote unquote the easiest part, because you already know that you are on the right side of the market. So if you actually want to take a trade without any type of confirmation, you could have entered a long here with a stop loss below the point of interest where you think smart money is going to start buying. So after taking this long here with my stop loss here, we can see that if we advance, price continue going higher. Let's put the 5-minute chart. I took some partials out here when price was hitting these equal highs, but my overall target was the void or the liquidity void and the order block that we saw here on the daily chart, which I knew price was trying to go to rebalance the void and to mitigate the short orders, the long orders that they had up here. So when price was hitting this level on the daily chart, I actually opened a short to edge my long. I closed most of my profit here around 75% or a little bit more, and you can see that the maximum RR of this trade was 1 to 36 RRs. And from here, because there was a distribution, there was analysis I made on the live sessions, I took a short from around this level with a stop loss up here and held that short until my original long here was stopped at break even. I actually thought that price was going to continue in higher to target even higher levels at 1.235, but I was wrong. I was not reading the market as I usually do. Of course, as we are humans and we can have mistakes, that's okay. The good thing is to acknowledge the mistakes we do and try to grow, not making the same mistakes over and over again. So the reason of why price is pushing lower here is because we are one more time grabbing liquidity on a higher time frame level. If we look at the weekly chart, we can see we had this equal highs, which was the foundation for my long. But after grabbing the liquidity, where is going to be the liquidity? Internally inside of the this entire range on the weekly, from this low to this high. So we can expect price to potentially target this low, which is the previous week low, where the next big pool of liquidity is going to be sitting. Here we are with a great trader from a BBS Academy. His name is Radu and he makes himself called ZenZen because he's a ninja on the charts. He has been with us almost a year and he's going to break down a very good trade he took on the Nasdaq, the indice. This trade managed to get to 150 RRs, and he's going to explain right now how he managed to get this beautiful entry following the smart money concepts and mixing it with Wyckoff.
So I'm going to start with the 4-hour. That's where I got my bias on the 4-hour chart, and then I looked for a refinement on the 15-minute chart and executed on the 1-minute. So if we look what price did in the past till closing on Friday, this over here was where Friday closed last week. Price was in an uptrend, making higher highs and higher lows, and that week after taking those highs, it start retracing, searching for internal liquidity, and my targets, we can see that the week before Friday, price did started to break down, and actually also had a minor break of structure here, with a little test mitigating this area before breaking down and closing on Friday. So what I was looking at for the next week was this area of interest. We have imbalances here and liquidity voids, and also equal lows here, which was my final target as a bias. So with that in mind, I went to the 15-minute chart. Let's see, what's it over here? Yeah, so now we're looking at the 15-minute chart, and this is where price opened on Sunday. We did it opened with a gap, and then it went and stop hunted those lows before starting to reach our area of interest, which was that little 4-hour gap. And this is where we have the sell to buy candle and the start of the area of interest. It was this whole up move, this whole order block here I was looking to short from. So that was my bias so far, and I was watching price trying to reach that area on the 1-minute chart.
Overall, we can say that your bias, in spite of being on a bullish trend, you identify a key level of liquidity, which in this case were 4-hour equal lows. So after price grabbed the liquidity on the buy side liquidity, making a higher high, you anticipated and moved to the downside to grab the liquidity below those equal lows. Is that correct?
Yeah, that's correct. And all I was looking for in the 4-hour and the 15-minute charts were an area of interest where I can short from where I can sell and look for lower prices. This is the 1-minute chart. This white line is actually that sell to buy candle and the start of area of interest, and we can see how nice price almost touched it, almost.
Yeah, just by minutes.
Yeah, and as it was approaching, it started forming what is a clear accumulation. We have a preliminary supply, a buying climax, automatic rally right away with a test, minor sign of weakness going below the AR, and then very clear UT and UTOD.
Yes.
Now at this point, after I saw the UTOD and this little move down here, I already placed entries. I already had entries here. But as soon as price broke down here, I started looking at this block, and as soon as the price broke the minor sign of weakness, I decided I'm gonna enter on this block as well with a really short stop loss, and if I'm wrong, I'm wrong.
Yes.
It ended up working actually very well, and it just hit that block and it started selling off from there.
It was a very good entry in spite of you first having a more riskier entry higher, then you identify a key level. After the structure followed your plan, you decided to enter a very nice tight stop loss entry, and well, you can now show us how you managed to hedge and then continue to hold the short.
Right, my first target and my first take profit was other 15-minute lows, other structures. It was basically in this area here, and as soon as I reached my target, I did take profit over here, and I was looking at this, what started to look to me as an accumulation, and after I saw this, what I identified to be the last backup, I told myself I'm gonna take a long as a hedge. If I was gonna hit these levels here and go break down, I was just gonna close it at break even. But I was actually hoping I'm gonna hit these levels over here, and then would have been a really nice hedge before going significantly lower. The trade I took was off this backup. It was here. I didn't take any profits on this trade. When it hit these levels here, I put it to break even, which that's what happened, and that was fine with me. I was hoping to go higher and get a nice hedge, but it didn't happen. After that, price kept breaking down and selling off. After this breakdown here, I actually went to sleep. I had the stop loss around here somewhere. So when I woke up, it was already 50, 60 RRs. So from there was really easy to take I took another profit at 65 RRs. It was really easy to hold after that, taking profits along the way, you know. There was other interesting things actually. I think in the 1 minute, you spoke about it. We spoke about it in the live session as well, about the volume. As soon as it starts to break down here, after the Utah, we have increase in volume, really nice.
Those were very great trades made by ZenZen or Radu, and here only for the sake of the explanation and the trades that he took, here are the actual trades that he managed to take when he was following this trade very closely and posting updates constantly on the chat. Now we are with Diego, another great student on BBS. He recently took a few trades, a short on year USD following our bias for the week, as we spoke earlier, and another great long on Aussie against the dollar that you're going to see here on the public chat on Smart Money Source. He published a top-down analysis on Aussie that played out beautifully, and now he's going to explain how he got to this idea and took a trade on lower timeframes.
The price was coming from this accumulation around here. We saw the price leaving with this. So price basically made an order block on the higher time frame. And as I had this accumulation and I was expecting price to reach this area, I was looking for the mitigation of this order block for then taking a long from here and go to the monthly target, which our target was roughly around there. So if I go to the lower time frame now, I'm just gonna go straight to the 5 minutes. So after that accumulation, price left that accumulation, and I saw this distribution happening here with the preliminary supply, selling climax, and all of the distribution stuff. So after I had these U-tags, I wanted to get inside with a, this was more like an aggressive entry because normally I wouldn't enter that aggressively, but I had this U-tag which form another order block. So I was looking to re-enter at the test of the U-tag inside the order block. So I went to lower time frame, I went to the 1 minute, and basically I just entered in base of the 1 minute time frame. So I had another tiny order block and then so once I saw the price leaving this area, so I've just decided to go inside with this aggressive entry, and this trade gave us 6.36 R and had 9 pips stop loss. And then from here, he approached the area that we were looking together at the live session, and I took this long trade here, and from there it just played beautifully.
So basically on this short on Euro USD, you had a higher time frame target for the bullish move and a lower time frame target for the short move. So you took a short and then you enter a long following the order flow basically.
And now we can go over the other one. Nice. So this one starting from the monthly. So I think it's better if I show you this first. It's cleaner. Mm-hmm. Can you see this?
Yes, perfect.
Okay. So this one was the monthly time frame. From the monthly time frame, I saw that we had equal lows formed. Then price broke below those equal low, but it didn't change structure. It wasn't like a continuation. It was more like a stop hunt, but price was coming from a downtrend. I wouldn't consider this to be a shift on market structure, because to be a shift on market structure, the price would have gone there, up here. So I expected the price to reach this high, to at least trying to take this high. So that's why that was my monthly target. That was around the psychological level as well, because I work around round numbers as well. Nice. And so I've targeted this as my monthly target, looking for price to go up here and then maybe move down again or just carry on from there. But it was already an extended move. So I was thinking maybe there would have been a stop punt around here, and then the price would have gone down. We had the stop punt, break of market structure around there, and that was the target for the monthly. Then if I go right on the daily, so from the daily, we can see after the break of market structure, during the break of market structure, we had some sort of accumulation, which I didn't even bother. But I know it was an accumulation because we had manipulation of the lows, roughly something like that. And then we had this mini trend line, which delivered the price efficiently. There was any imbalance or any voids around here. Price was taken care well of. And after this efficient price action, we had another reaccumulation, and price was slowly making its way around the monthly target. So around here, this reaccumulation was actually working. So I was expecting the price to either, because it was here when we were looking at, I was expecting the price to tap inside this, which could have been considered still an order block, and then maybe move and make its way up, or come down here and make its way up. So I had three targets. I had this, I've called them OB1, OB2, and OB3. But the one that I liked the most was this one, OB2, because it was in a discounted area from the start of the move. So I wasn't considering this one that much, because even if we had a reaccumulation here, price could have still come down to give us a last point of support. And plus we had this candle here, which had a big imbalance. It was the only an efficient candle. So this candle here, so basically it was coming from an order block. It was an imbalance. So I was looking for price to go up here, roughly up there, come back here, and then target the monthly target. So if I go down on my 4 hours, inside the reaccumulation, we've made, there was a distribution. So yeah, but basically inside that reaccumulation that we had around here, then we had this distribution. Once price was leaving this target, I saw that this one was not holding anymore, because I was looking this as a distribution. So I was expecting the price to go lower than this. So this one, my last order block, can go away. Then price was making its way to the second order block, the one in the discounted area. And so once I got here, I went even lower time frame. So I went to the down to the 5 minutes time frame, and when I was looking how price was reacting around this area. So this one was the bigger time frame order block, but I'm gonna delete this one because we have a refined one. So this is the refined order block. I believe it was on the 1 minute time frame. Yeah, so the order block started from here. So we had a 1 minute break of structure in here, and then we had 5 minutes break of market structure. So it means that in 3 time frames, the structure was changing. So this order block, this refined order block from the higher time frame would have been in theory respected. So I was looking for price to leave this order block, come and mitigate the order block, and then take a trade from around here. And this trade had only roughly about 5 pips stop loss, because I've entered on the 1 minute time frame. So if I go down on the minutes. So yeah, once we left this order block, price broke the previous high, this high, went high, and it come and mitigate this order block. After it mitigate this order block, it create another order block inside, and here is where I've actually took my trade, because here is where how I was planning them. When I go inside my C trader, this is roughly where I took the trade. So I've entered here, and I'll just carry on and drawing this point of interest. So I'm trying to get a second entry. So basically, once price made this order block around here, I just enter with a second entry. And the way that I've managed my trade, once this one was in profit, I went to break even with this one, and I'll open a second trade. I took profit from the second trade, but I should have taken it from the first trade. But the first trade ran about 9 R in profits. So yeah, you can see that the trade went to 9.15 R, but I never closed this trade in take profit. So when the trade came down, it stopped me out at break even. And the second trade, at least I secured a profit with the second trade, and that one went roughly, I think, to 3R. I went from here to there. Yeah, it went to 4R. So second trade was good. First one, I could have taken profit, but because I'm doing the FTMO challenge, I'm actually trying to experiment something different to add multiple entries. And yeah, that's how I took the trade.
Those were very amazing trades, Diego. I honestly, I'm amazed on how little time you advanced so quickly doing this advanced analysis and taking these beautiful trades. So congratulations, because I know that your FTMO is thanking you because of this. So yeah, thanks for sharing your view, your trades. Thank you very much.